Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Starting with the Australian dollar, at present still remains contained at 69.6080 resistance. After some indecisiveness and hesitation, the market is actually still staging a possible pullback after last night's outlook, price action, and also from the cap of this level to challenge the support coming in at 68.15. I do anticipate from the technical view that we should see further weakness and therefore expect to see the market drop eventually to its target. Still to come tonight at 12:30 Sydney time is the non-farm payrolls number, which takes the centre stage. And also the fact is that we're looking for around 181,000 jobs in November after climbing by 128 in October. The unemployment rate remains steady towards the 50-year low of 3.6. So while the bears are still holding to the helm, I still looking for a further pullback and eventually reach its targets. As I said, around 68.15 or 67.5. After the rejection level, we can see here on the overnight from prior that the market is still struggling at this level, 111.15.25. It is assessed, though, if we do get a stronger labour force number, then we could see the market drop back to the bottom side of this range, seen around 110.30. Do keep your stop losses tight and according to your risk management in case we do get a break of 111.20, 111.25. But from a technical point, we should still eventually see this price action drop away from this level of 25 and down to, as I say, the target I'm looking for, eventually 110.30 or even 109.50.70. The outlook for dollar yen still remains negative, and I still expect to see further yen strength as the uncertainty continues to play for the US and China trade agreement. With Donald Trump still orchestrating the moves after earlier he sent the market on a wild goose chase after he said that he's off, on and now on again trade talks with China, is that we could still see risk to safe haven demand, and therefore I do expect to see eventually a move to 108.20 or maybe down to 107.50 with any advances to fail towards 90.95. Well, looking at the weekly outlook, you can see the pound has progressed further after growing confidence that next week's election will be given to the Conservative Party as a minority win, and therefore could see an easier exit for Brexit. Resistance at this stage comes in at 131.90, and let's see if we get a rejection like before. A break above there could see a further move up to 133 as a target, because we are starting to see a trend from the weekly outlook. As you can see, the market again holds underneath the level of 1,482, and while doing so, could see further risk of a pullback to the level around 1,462 to 64. But that being said, a close above 82 would give further scope up towards the target around 96 to 1,505. Let's see if the market can actually progress further to the upside, but do look for the dip in case we get some disappointment out of tonight's numbers, which is unlikely at this stage. Wrapping up with oil, well, the OPEC has not quite finished their meeting yet in Vienna, and there's still a little bit of uncertainty in terms of where the market can go. And that case, I still feel from a technical point, it's bullish, and therefore looking towards an objective of 59 to 61. And any pullbacks, as long as we remain above $57 a barrel, I support a further bullish case for oil. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new weekend.